Global financial scams represent a significant threat not just to individual investors but also to the broader economic stability of developing economies. These fraudulent activities can undermine investor confidence, drain national resources, and impede the economic development of vulnerable nations. This article explores the diverse economic impacts of global financial scams on developing economies and discusses strategies to mitigate these effects. Nature of global financial scams. Global financial scams can vary widely, from advanced fee fraud and Ponzi schemes to more sophisticated securities fraud and corporate financial misreporting. Developing economies are particularly susceptible due to weaker regulatory frameworks, limited financial literacy among the populace, and sometimes, a lack of robust financial and legal institutions. Economic impacts on developing economies. Loss of foreign investment. Financial scams significantly erode foreign investor confidence. When investors perceive a high risk of fraud, they are likely to withdraw existing investments or decide against investing in such regions, depriving these economies of crucial capital for development. Drain on national resources. Scams often result in substantial financial losses for individuals and businesses. This not only affects the victims directly but also reduces national economic output by diverting funds from productive use to fraudulent schemes. Increased cost of capital. The perception of higher risk associated with investing in countries prone to financial scams can lead to increased cost of capital. Lenders and investors demand higher returns to compensate for the risk, making it more expensive for businesses in these regions to access financing. Impact on financial sector stability. Large-scale scams can destabilize the financial sector, especially if they involve major banks or financial institutions. The collapse of financial institutions following fraud exposure can lead to broader financial crises. Regulatory and remedial costs. Developing economies may need to spend considerable resources to enhance regulatory frameworks and enforce existing laws to combat financial scams. These are resources that could otherwise be allocated to development projects. Social and political repercussions. The fallout from financial scams often extends beyond economics, affecting social trust and political stability. Public disillusionment with the financial system can lead to social unrest and a lack of trust in public institutions. Strategies to mitigate the impact. Strengthening regulatory frameworks. Developing robust legal and regulatory frameworks is critical. This includes setting stringent guidelines for financial reporting, investor protection laws, and regulations governing financial products and institutions. Enhancing transparency and accountability. Promoting greater transparency in financial transactions and corporate governance can help prevent scams. Public disclosure of financial information and independent auditing should be mandated. Building financial literacy. Educating the populace about financial products and the risks associated with investments can reduce the vulnerability of individuals to scams. International cooperation. Global financial scams often cross borders, making international cooperation essential in combating these frauds. Information sharing and joint enforcement efforts between countries can help track and dismantle international scam networks. Effective legal systems. Developing effective legal systems that can quickly and fairly adjudicate financial fraud cases is crucial. This not only aids in deterring potential scammers but also helps in recovering assets. The economic impact of global financial scams on developing economies is profound, affecting everything from investment flows to social stability. By implementing comprehensive strategies to strengthen financial and regulatory systems, developing nations can better protect themselves against the deleterious effects of financial fraud and create a more secure environment for economic growth and development.